Hi, my name is Jordan Wilson. We're going to spend the next few episodes looking at considerations in how you should assess a potential financial advisor. There's so many out there that it can be confusing for many people as to what is the best fit for their needs. And so I was asked that question, so I decided to sort of take a slight detour and address that sooner rather than later. Now, I'll say up front, when we go through some of these advisor selection comments, always bear in mind that I may have some hidden biases. I'm trying to be as objective as I can, but I'm sure there's some hidden bias that'll creep in on my part. And part of that is probably because of my professional background and experience. So in my case, being a chartered financial analyst, a Canadian chartered professional accountant from the chartered accounting side, and I'm also a Canadian certified financial planner. So those might creep in as being seen as favorites at times, or more likely I'll just try to use them as good examples because I'm most familiar with them. The other aspect when we get into the fee side is, again, I run a fee-only fiduciary practice. So I probably, both hidden and unhidden, believe that fee-only fiduciary is the best way for clients. But you need to factor in my background and my business model in my comments because I may have some biases that creep through. So with that little caveat, let's get started. We're going to go through a few different aspects that you need to consider when you select a financial advisor or financial planner. We'll look at qualifications. That's the technical qualifications they bring to the table. We'll look at their experience. We'll look at the personal fit between the planner or the advisor and you. And we'll look at the fee structures. Today we're going to focus on technical qualifications, and we'll get into the rest in subsequent episodes. So the first thing I'll say up front is that you need to distinguish between financial advisor and financial planner. Now, an advisor is someone who offers a financial related service. Maybe that's your banker, your stockbroker, asset manager, your insurer. It can also be your tax lawyer or your accountants. So anyone that provides financial advice is an advisor. Now, a financial planner is a subset of financial advisor because they advise you on financial matters. But advisors are not necessarily planners. Just something to keep in mind. Planners may provide many different services. They can provide investment advice. They can sell funds to you, set you up in insurance products, estate planning, all these sort of things. But a financial planner will always offer financial planning as one of their core bedrocks. Maybe that's budgeting. Maybe that's long-term financial planning for you or your family. So again, small difference, but just be aware that in terminology terms, there is a difference in financial advisor versus financial planner. So we'll start with the technical qualifications. Now, part of the problem in the finance world is it's an alphabet soup of professional designations. There are so many out there. And probably a lot more than you need. If I look at my background, I'm a CPA. But it wasn't that long ago that you had 3 different classifications of accountant in Canada. You had certified general accountants, CGAs. And in rough terms, that was more of the bookkeeping, core financial statement preparation side. You had the management accountants, which again, as it sounds, it was more the managerial side of accounting, cost accounting, inventory, those sort of things, more on the business side, doing the accounting there. And then you had the financial accountants, which was the audit side, the tax side. And those are the ones that you see that went through PricewaterhouseCoopers, Ernst & Young, KPMG, articled for probably roughly a 3-year period, got their letters, and their background is a lot more on the financial accounting side as opposed to the managerial side or the general side. So 3 quite distinct training programs and apprenticeship programs to get to where they were. And they have quite different skill sets. And then one day the CPA Canada decided we want to merge all 3 together, and you end up with 3 disparate groups, now all labeled the same. So if you're dealing with a CPA in Canada, you need to actually drill down a bit further and find out what their background is. If you're dealing with someone that's never had a tax history or training, that might impact your decision making on choosing them versus someone that went through the in-depth tax course and is quote unquote a tax expert. So even within the same designation, you're going to have vastly different backgrounds and experience levels. Another area that's confusing, especially in Canada, is the financial planning side. So in Canada, we have the largest group would be the certified financial planners, the CFPs, which is my designation. But you also have registered financial planners, which you may encounter more in someone that works for a bank. Often they tend to work for a bank. And then you have personal financial planners, PFPs. And in many jurisdictions, you can actually practice as a financial planner without a designation at all. So in Canada, you may come across someone that's a CFP, an RFP, a PFP, or the no-name financial planner. And again, how do you differentiate between them? So it's sometimes difficult to compare even within a professional designation. And then, as we'll get into a little bit later, how do you compare what is relevant to your needs? But I think the thing is, in today's world with so many designations out there that people can work for, I think you probably want to deal with an advisor who has a credential. And the reason I say that is it's not that hard to get some of these designations. And I mean by hard, the time and the cost required. They may be challenging, they may give you great skills, but it's not like you're becoming a neurosurgeon and have to dedicate 14 years of your life to that path. So I would say you want somebody that actually took a bit of time to get a professional credential. Because what it tells me is if they don't, what is their commitment to that field of expertise? And it also asks me, okay, if they can't spend a few hours studying and writing a few tests, are they going to maintain their knowledge level in that area? And that's a separate issue. But if I'm not prepared to spend 5 hours a week studying for a program, am I going to, on my own time, spend it keeping current of technical matters in my area. So that's what would be a concern to me. So I think when you start assessing potential advisors or planners, you just want to see, okay, what kind of degrees, what kind of designations, what type of professional associations are they members of? And then after you're done, you go home, check out the certifications and professional organizations, just to understand better what that designation means to you and your needs. And as I talked with the vastly different backgrounds for CPAs now in Canada, you may want to have them explain a little bit better what their background is as far as their professional designation. Now, the second aspect here is that, to me, credentials do not equal competence. I think credentials give you some baseline. As I was just saying, if I can't be bothered to spend a few hours to get at least one designation, then what does that tell me as a potential client about your work ethic or your ability to maintain your technical currency? The other thing with a credential that's useful is that if you're a member of a professional organization, then you probably have to sign off on a code of ethics or professional standards. And often that gives a client some comfort that they will be professional and take your best interests in heart. So I think that's important too. Another thing with credentials is that there's usually a minimum annual continuing education requirement. And that's also tends to be useful, where as a CFP in Canada, I think the current minimums are 25 years of approved continuing education each year. And at the end of a year, I have to sign an attestation that I achieved that. In some organizations, I actually have to submit what my hourly breakdown was. And there's often differentiations between what is considered approved continuing education and unapproved. So I can't just say, oh, I went to the Chamber of Commerce lunch last week, I'll count that as an hour. That doesn't work that way. It's got to be relevant to your professional designation. So those are sort of areas where if someone is credentialed, it doesn't mean they're competent, but it also does give you a little bit of comfort that they are adhering to some rules, that they're maintaining some continuing education. And the other caveat I'd point here is, even if I'm credentialed, some of us are good, some of us are bad. And that's just the way it works in the world. But if we look at someone like, say, a Bernie Madoff type person, he ran a business with high-end clientele. And he actually had regulators come in, audit his business, and he was able to fool them for a good while. So even if someone does have credentials, it might not mean that you should expect perfection from them or the institute that oversees them. There's still a lot of bad apples out there that you have to be aware of, regardless of whether they're credentialed and members of organizations or not. So just be careful. The other area to focus on is, we're credentialed. but you want to find a match to your specific needs. There's lots of generalists out there, but there's also quite a few specialists. What do you need? Do you need someone to do your budgeting and general financial planning? Maybe a CFP is the best fit for that. Maybe you have estate planning needs or high-end tax advisory requirements. In many cases, a certified financial planner or RFP or PFP will not have those skill sets. And they definitely will not have those skill sets if they've just taken CFP program without anything else. So you may need to find someone that's a CPA or a tax lawyer who has their in-depth tax. And the same in my comment here is, as a CFA, I was trained in a lot of investment specific skills, but they do not train you on Canadian tax in the CFA program. So if you came to me for tax advice, yes, I have an understanding of it because I'm a chartered accountant originally and did tax work in public practice, but I don't hold myself out as a tax expert. I don't do tax because that's not an area of my current expertise. And so I would want you to find somebody that is current and high level in their tax right now. Conversely, if someone wants to do sophisticated investing, then they're probably looking more for a chartered financial analyst than perhaps somebody who has their insurance license. So it's sort of horses for courses, as they'd say. And the other thing is, you want someone that's relevant to your needs today, who can fulfill your objectives, but also sort of consider about tomorrow. What does tomorrow hold, or you think it will hold, for your needs and objectives? Because the cost of doing business is, let's say you deal with me, just to use an example, for the next 5 years on some, and let's just say I'm just do basic financial planning. And we set up your financial plan and we develop a basic investing program and such and such. But then 5 years later, your needs have grown and changed. And I may not be able to serve those needs. So you have to look elsewhere. And there's a cost in doing that. You lose the continuity, the consistency, and the knowledge base that I have of your personal affairs and your financial situation. Whereas if you'd started out with someone who could handle your needs out into the future, or had a network where, okay, now we need a tax lawyer, okay, here's a referral or someone that can, your financial planner can act as an intermediary and still be involved in the process, then that might be of value. So again, you want to look for someone that can handle your needs today, but also can grow with you. And I think that's important. And the final thing, we talked about the professional organizations. Now, it's one thing for me to claim I'm a CFA or a CFP or a CPA. But I want to make sure that if I'm a potential client, that this person is actually a member in good standing of these organizations. So if I'm meeting with a potential advisor who claims to be an insurance underwriter or has their CLU or something like that, I want to see proof of that. And then once I'm done, I want to go home. And many professional organizations now, you can check the status of an individual on their website. For example, if I went into Financial Planning Canada's website, typed my name in, it will come up and it will say, hopefully, that I'm a member still in good standing. Similarly, if you go into the CFA Institute, you can also verify that. And the flip side as well is if I'm looking for a CFA or a CFP who's located in Saskatoon, Saskatchewan, I can go to each of those websites, type in, I'm looking for basically a CFA in Saskatchewan, and they'll give you a list of all the members in good standing who are based in Saskatchewan. And that's a good way to possibly start your search. If you're looking for a financial planner, that will, you go to FP Canada, you type in your location in their database, and you can search by city. You can search by client type. Do they do senior or retiree planning? What's their area of specialty? Investment advice, budgeting. And you can even search by languages spoken. So in Saskatchewan now, Tagalog is the #2 language after English. So a lot of Filipino immigrants here. Perhaps they're more comfortable speaking in their native language to an advisor. So they could search by Tagalog. So I think that's a useful tool as an initial step if you're looking for advisors, is to Google the professional organizations and then start your look via their website in the location in which you live. The other point the other 2 points I'd make here are, if someone asserts that they're a CFA or a CPA or a CFP or whatever, and you can't verify that, or you find out they're not in good standing, then that's a huge red flag. At least to me it is. So you need to find out why, if not just, cancel them off the list in the first place. So are they, just retired from, they don't want to pay the annual fees because they don't get the value of it? Maybe that's a legitimate example. But it could be because they were suspended or terminated for past acts. Maybe they did not continue their continuing education requirements. So you need to sort of figure out why, if you still want to pursue a business relationship, that they are not members in good standing. And I think that's, again, the advantage we discussed with the organizations is that you agree to do certain things and act in certain ways through your standards and ethics attestations. And the beauty of being a member of a professional organization is that if you're unhappy with the service that you got, and not just, I wasn't happy, I'll do a TripAdvisor type negative or a Yelp ad, where someone you feel has breached their ethics or committed malpractice. Now, you can go through the legal system in some cases on this, but if they're not a member of an organization, you really don't have a lot of other recourse. If they're a member of an organization, then usually there is a complaint filing system, and you can file a complaint in those organizations, and those will be investigated and adjudicated. And I must say that's something I spent many years pursuing my CFA designation or my CPA designation. The people that hold those designations, they don't want to be suspended or lose them because of their practices. So having that sort of sword of Damocles over your head does actually help ensure that mistakes happen, but that these people will actually work in good conscience and good faith to try to implement your financial needs. So good. And the final point I'll make on the in good standing is maybe not a huge problem, but again, people are mobile. So if I sit down with a CFP who's from Australia and I'm living in Western Canada, yeah, okay, maybe he or she's in good standing with their professional organization. But really, that probably doesn't mean a whole lot to me if I'm in Canada and they're from Australia. And the opposite's also true. If I was in Australia, how can I effectively deal with clients on the same level as an Australian trained financial planner? So in Canada here, if I went through the CFP program, I would learn about things like the Canadian Registered Retirement Savings Plans, the education savings plans, the tax-free savings plans, these sort of things. I'd have a basic understanding of Canadian tax rates, how Canadian eligible dividends receive preferential tax treatment over non-eligible or over interest income, how the capital gains tax works. I have zero idea what the Australian tax laws are because it wasn't my training. And so if you are dealing with an Australian accredited in good standing CFP in Western Canada or Arizona or some other non-Australian location, then what value is knowing that they're a member in good standing of a different country's organization? So you'll have to dig again a little deeper. How are they current in Canadian or Arizona tax or planning laws? That's all I wanted to discuss today on technical qualifications. We'll continue with our look at selecting financial advisors next time with a discussion on experience, because it's one thing to have qualifications, but if you don't have the right experience, it means nothing. Thanks for listening. Have yourself a good day.